Welcome to the deep dive. We're here to sift through, well, often complex information and hopefully uncover some clear, actionable insights for you.
That's the goal.
Today, we've got something really fascinating. It's an annual report letter from a company called Markel, and they have this, let's say, unique way of defining success.
Mm-hmm.
What really caught my eye were some financial figures that, honestly, at first glance, they seem a bit contradictory. So, okay, let's unpack this.
Yeah, and our mission today really is to get past just those headline numbers. We want to understand the philosophy underneath, especially how Markle measures its progress over these really long time horizons.
Right.
And this letter, it really does challenge a lot of common assumptions about financial reporting, about what corporate value actually is,
Yeah.
which, is exactly why it's such a great source for us to dig into.
And they definitely have the history to back up that long-term talk. They started way back 1930.
That's right, 1930. And then they went public quite a bit later in 1986. I think it was around $8 a share.
$8. And by the end of 2022, what was it? Over 1,300.
$1,307, yeah. That works out to about a 15% compound annual return for 36 years straight.
Wow. That kind of performance, it really sets the stage for this idea of long-term vision, doesn't it? Especially when they say they're aiming to build one of the world's great companies.
There's a bold claim.
It is, and that ambition seems tied directly to this commitment they have to a win-win-win culture. Sounds great, very aspirational. But, in today's market, how do they actually make sure all three groups, customers, employees, shareholders, consistently win? Is there never a tension there?
Well, they argue it's foundational, and crucially, that these wins are synergistic, not really in tension. They break it down. First, customers win.
Okay.
They win by getting products and services they need, fair prices, think insurance, food from their bakeries, medical care stuff, even fire protection. It's about solving real problems for people.
Providing tangible value, basically.
Then the second pillar, associates win. That's their term for employees. They win by having jobs that support families, communities. It's about, creating learning, finding some real joy in serving others. They see their work as solving problems, making things better. That's a win for them.
A sense of purpose plus the job itself.
Mm-hmm. And finally, shareholders win. And this one's maybe more obvious through good returns on their capital.
That $800 to $1,300 plus share price certainly speaks to that win.
It definitely does. It's about responsibly managing that capital so the whole enterprise can thrive for, decades.
So it's not just checking boxes, it's creating this cycle. I think the letter says something like, each win gives us the fuel and credibility to do it again the next day.
Precisely. That's the key insight they're pushing. Sustained effort, building credibility.
Yeah.
These aren't just byproducts, they're the output of getting that three-way win right. It's the engine, not just a nice-to-have philosophy.
Okay, now let's get back to those numbers I mentioned, because this is where Markel's reporting gets, here's where it gets really interesting. So they reported a 9% decline in total revenues for 2022, down from $12.8 billion to $11.7 billion. So how on earth can they turn around and say they're happy and proud about that?
Right, and this is where they flag what they call the curious nature of standard accounting rules, CAP.
CAP, right. Generally accepted accounting principles.
Yeah, and they use this great analogy in the letter, mixing chocolate milk and motor oil.
Okay.
Both liquids, both valuable, both measurable in ounces, right? But you'd never mix them. The mixture isn't useful for anything.
Makes sense. So how does that apply here?
Well, GAAP total revenues for a company like Markel essentially mixes two totally different things. First, what they call orange revenues.
Orange. Okay.
Think of this as the normal recurring stuff. Insurance premiums, sales from their Markel Ventures businesses, interest and dividends from investments. This orange stream, it actually increased 21% in 2022, hit $13.2 billion.
Ah, okay. So that's what they're happy about. A 21% increase in the operational stuff.
Exactly. That reflects the actual business operations doing well. But then you've got the other stuff, what they call blue revenues.
Blue revenues, chocolate milk and motor oil. Got it.
Right. This blue part is the unrealized change in the value of their stock portfolio. So when the stock market tanks, like it did in 2022.
That number goes negative even if they didn't sell anything.
Precisely. In 2022, it swung to a negative $1.6 billion. Compare that to 2021, when it added a positive $1.9 billion. Huge swing.
So their point is, mashing those two together, this solid operational growth and the volatile market swing isn't really informative. It makes progress look like, well, not progress.
Yeah, it obscures what's really going on operationally, like judging your car's health by adding the fuel gauge reading to the oil pressure reading. Doesn't make sense.
Okay, that clarifies the headline number. But doesn't that volatility, those big swings in blue revenue, create practical challenges? Even if they have a long-term view, does it cause issues with investors focused on the next quarter?
That's a fair question about perception. Markel's stance is basically that over longer time horizons, multi-year periods, these accounting nuances tend to fade away.
The long view smooths it out.
Right. They point out that while blue revenues bounce around year to year, the long-term performance is strong. Their equity portfolio returned, what was it, 9.5% annually over 5 years, 13.2% over 10.
Okay.
And the insight for us listening to this isn't just about Markel. It's a reminder for anyone looking at company reports. Always question, what's inside that total revenue number? Are you accidentally mixing chocolate milk and motor oil in your own analysis?
That's a really useful framework. Okay, so understanding that revenue split helps make sense of their three-engine system. Let's dig into how each of those engines, insurance, Markel Ventures, and investments actually performed in 2022, which was a tough year for many.
Yeah, each engine really does play a specific vital role. Let's start with the insurance engine. Big numbers here. Earned premiums were up 17% to $7.6 billion.
Solid growth.
Very solid. And crucially, their underwriting profit, that's profit just from the insurance business itself, after claims and expenses, was $627 million. That brought the total for the last 2 years to $1.3 billion.
Which is a big improvement on the years before, right?
Huge improvement, almost 4 times what they made in the 4 years prior, from 2017 to 2020. So they've really turned a corner there in core profitability.
What else is in that insurance engine?
They highlighted growth in a couple of areas. One is insurance-linked securities through their NEFLA platform. The other is fronting through State National.
Can you quickly explain those?
Sure. NEFLA basically packages complex insurance risks, like catastrophe risk, into financial products for capital market investors. State National provides the licensed insurance paper, so other companies like AGAs or Insurtechs can write policies without needing their own full license. Those two together brought in nearly $500 million in revenue and almost $200 billion in operating income.
And NEFLA is adapting to climate change.
Yeah, they mentioned adjusting pricing for property catastrophe risks because of what they call the new normal of losses, climate change, more wealth concentrated near coastlines. They talk about using real-time data through pricing to guide decisions.
Interesting. Using price signals to manage risk.
Exactly. And they're also creating tools for new risks, like uncertainty in renewable energy projects. They see it as trying to future-proof the business. They even sold off a couple of MGA businesses to realize a gain, took a goodwill write-off, all aimed at improving future returns.
Very active management, not just sitting back. Okay, what about the second engine, Markel Ventures? These are their operating businesses outside insurance and investments, right?
That's right. And the Markel Ventures engine had, frankly, a stellar 2022. Record operating revenues $4.8 billion, up 31%. And record EBITDA, that's earnings before interest, taxes, depreciation, and amortization of $506 million, up 26%.
Records, despite all the chaos of 2022. Supply chains, inflation.
Exactly. The letter explicitly mentions achieving these records despite unrelenting labor and material supply chain challenges and a myriad of ongoing inflation pressures, which really says something about the quality and resilience of those businesses.
And their philosophy there is quite distinct too, isn't it? Something about owning it forever.
Yeah, it's powerful. They ask themselves, if this were the only business we or our family was ever going to own, what would we do?
That really forces a long-term mindset, doesn't it? How deep do you think that runs when they're facing those immediate pressures, like inflation?
I think it's absolutely core. It pushes them away from shortcuts towards building deep, sustainable value. These businesses provide, as they say, resiliency, diversification, and cash flow for the whole Markel system, a real bedrock.
Okay, engine 3, investments. Given the market downturn in 2022, how did that part hold up? We know the blue number was negative.
Right. The overall portfolio value went down, but even here there were positives. The orange revenue part, recurring interest and dividend income, actually hit a record $447 million.
So cash flow from investments was strong.
Yes. And while the total return numbers were negative equities down 16%, fixed income down about 5.8%, they actually outperformed their benchmarks. The S&P 500 did worse, down over 18%, and the bond benchmark was down 13%.
So relative outperformance even in a tough market. What's the secret sauce there?
Discipline. They call it their time-tested discipline. For bonds, it's high credit quality matching future insurance liabilities. For stocks, it's a strict four-part test they always follow.
Which is?
Profitable businesses, good returns, low debt, talented managers with integrity, opportunities to reinvest profits wisely or discipline, if not, and crucially, buying at reasonable valuations. That's their catechism.
And they actually leaned into the downturn.
They did. They quote the investor Shelby Cullum Davis. You make most of your money in a bear market, you just don't realize it at the time.
That's a classic line.
It is. Because Markel has a strong capital position, a bear market lets them deploy cash and buy those quality assets, following their test, at better prices. That sets the stage for future gains when markets recover. They were actively investing through 2022.
So it really sounds like these three engines, while strong individually, are designed to work together. The letter talks about an integrated architectural design, a virtual feedback loop.
Yeah, and that analogy of rope with three interwoven strands being stronger than any single strand, that synergy is key to their model.
Okay, we've talked strategy, numbers, the engines, but the letter spends a good amount of time on something else, something less tangible, the people. How does a company keep this long-term focus, this unique culture going?
This really gets to the heart of it, doesn't it? They highlight the retirement of Richie Witt. He was connected to Markel for, wait for it, 5 decades.
50 years. Wow.
Incredible. And they hold him up as embodying the Markel style, always asking, what's best for Markel long term? But just as importantly, they credit him with building the next generation of leaders, naming people like Jeremy Noble, Mike Keaton, Andrew Crowley. It's about that continuity.
Passing the torch, embedding the values. And they use some interesting analogies to drive this point home, right, from sports.
They do, really powerful ones. First, they talk about Cal Ripken Jr., baseball's Iron Man.
Famous for playing 2,632 consecutive games, never missed a day for years.
Exactly. And Markel's point is, yeah, Ripken had great stats, hits, home runs, but his real impact, the thing that multiplied everything else, was just showing up every single day. That unrelenting presence, that dependability for his team, you can't easily put a number on that.
The numbers don't tell the whole story.
Right. And the second analogy is Bill Russell, the legendary Boston Celtics center.
11 NBA championships in 13 years. Unbelievable record.
Unbelievable. But Russell wasn't always the top scorer. His main contribution, they argue, was defense, which is harder to quantify statistically. His energy, drive, and the will to win, they say, defy quantification, but they were undeniably real. The Celtics won when he played.
So the impact is clear, even if the stats don't capture it all.
Precisely. And Markel then says, imagine having more than 20,000 Ripkens and Russells, their employees. The idea is that the numbers keep adding up, but they don't tell the whole story. They use that classic phrase, the map is not the territory.
So what does this all mean when you put it together?
Well, for us, the insight here is profound. Real value, whether in a company or maybe even our own lives, often lies in those consistent, maybe unquantifiable efforts, showing up, the will to win, the teamwork, things that don't necessarily show up on a performance review spreadsheet, but are absolutely fundamental to long-term success.
It suggests that the financial statements, however important, are just that map. The territories, the people, the culture, the shared commitment over time.
That's exactly Markel's argument. They state plainly, people come first. And they believe fantastic things happen when people come together, persist towards a common goal, guided by a set of shared, timeless values. That's what they credit for their decades of success: trust, dedication, purpose.
So wrapping this up, as you listen to this deep dive, maybe consider what Markel's story really tells us about how we measure success. Is it just the bottom line? Or is there something deeper?
That really is the final provocative thought, isn't it? If things like long-term value creation, ethical practice, and these unquantifiable human contributions, that dependability, that drive, are as crucial as the financial numbers, how should that change how we look at other companies?
Well, even ourselves.
Exactly. How might it change how we approach our own careers? Maybe valuing consistency, teamwork, that showing up aspect alongside the measurable achievements, or even personal goals. Maybe recognizing that true greatness, whatever that means to you, often lies in things that resist easy counting, a testament to human effort and shared purpose over the long haul.
Something definitely worth thinking about. Thank you for joining us on another deep dive. We hope you'll continue exploring how different organizations, and maybe even you, define and pursue your own versions of greatness.